welcome. We're so glad to have you here. Before we get started, just a couple of housekeeping items. This session will be recorded and we'll send that out afterwards, along with a couple brief surveys. And it's just a couple of questions, and your feedback helps us continue to bring great sessions like these to the WGU community. Other than that, you can always visit our YouTube channel for past sessions. We got a lot of good ones here with our friends at Commerce Bank as well. And we host these with Commerce Bank about once a month, so you can make sure to check Handshake out for those. So other than that, I'll go ahead and turn it over to our friends here at Commerce Bank, and they are presenting on an exciting topic, getting out of debt and how to avoid it in the future. So with that, I will go ahead and pass it over to you, Stacy and Matt.
Wonderful. Thank you. I really appreciate that warm welcome, Hong. We always love being a part of WGU's family. We always feel so very welcome. So thank you for having us. I just want to get started today with talking a little bit about why we're here and why it's so important to raise financial wellness awareness. So we're going to talk through a couple of points today, but we also want to get you onto the My Milestones platform so that you can follow along and navigate with us. So we're just going to walk through a little bit of this first. I just want to say what a statement of care and transparency for you all, pardon me, as students, alumni, and staff, that you're part of a place with WGU that really truly cares about you to be able to be successful in achieving your financial goals as well as improving your health at the same time. And with that part of it, I would like to introduce myself. I'm Stacy Kay, and I am the Workplace Banking Implementation Specialist here with Commerce Bank. I'm joined today by Matt Edmond. He is the Workplace Banking Manager, as well as Mike Trichek. This is kind of a little treat for you all today. He is our administrator from our Consumer Risk and Compliance team, and we're all located here in the KC market. I would like to tell you a little bit more about Mike, as he has worked for Commerce Bank for 17 years, and he is in the consumer risk area, focusing primarily on credit risk, operational risk, and policy risk. So it's great that we have him here today. A great deal of his passion lies in helping people understand credit, as well as just finding better ways to manage their financial success. He's helped numerous individuals over the years, just with both group education as well as one-to-one education regarding credit and budgeting. He works with 3 big credit bureau agencies on a frequent basis to just better understand how scoring impacts both bank and individual consumers. He is married with 2 kids and has a very spoiled Labrador retriever, which I'm sure we can all appreciate the doggy, furry friend love. So we're glad to welcome Mike today. He is our line of business specialist that's going to help facilitate this course and really give you a bigger depth of getting to the bottom of how to get out of debt and how to avoid it. He's got some really unique insight with his background, so we are very pleased to have him. So thank you, Mike. Appreciate you being here today. We will have him jump in a few areas, and I'll invite him into conversation as we move through the facilitation. But I also want to encourage you, as Hong did, we want to have you put your questions into the chat. Matt will be monitoring the chat, and we really want to engage you all and get some real-time answers and some solutions for you all. So please participate, jump in there with anything you've got going on. This is a safe space, so just really want to encourage you to engage. Oh, Ash is here too. Ashley from Commerce Bank has also just joined us. She's excited about this topic because we all are excited about this topic. So quick on the agenda, we just want to cover the My Milestones platform briefly, which is what I mentioned before. This is a free benefit to you all as being a part of WGU, so it's wonderful. We talk about why financial wellness. Well, when we think of wellness, we typically think of our health and our mental health. We don't really think of that financial component, but in studies, we're really showing that financial stress contributes to both our health and mental wellness. So the goal is to continue to grow your knowledge. And we want to do that by providing a tool to support and help alleviate that financial stress, which will then turn results all around into better health for every aspect. Today's course is a hot topic, as Hong stated, getting out of debt. And it is, sorry, I just jumped there, getting out of debt and avoiding it in the future. We always want to make sure that we have a call to action because when we gain knowledge, we need to know how to use that and start creating better habits. So we will have a call to action and show you some steps to get to that next place in your financial journey. Lastly, we've always allotted time for Q&A, and we want to make sure that we get those questions answered for you in real time. So we just
Hey,
talked a
Stace.
little, yes.
Sorry to stop you. We're still on the
Oh,
opening
you
screen.
guys are,
You
aren't
might try
you?
unshare and reshare and make sure volume is included if you got any videos.
Sounds good. I do have all of those coming up for you, so we definitely want to make sure you can have access to all of that.
There we
There
go.
we go. Okay, we're back in business. Thank y'all for that. Technical difficulties, life's journeys. Once you guys get to know me, you'll know I'm full of technical difficulties, but we're gonna rock and roll. All right, so we talked about personal finance and the journey that y'all are on and how different that is for everybody. This tool really allows you to assess where you are and explore your goals and your strategies and uncover some personal financial tactics and then measure that. We'll see what your financial stress score is. The other part of this is that it is completely firewalled. We don't share anything with anybody, so it gives you that safe space, one-stop shop to get reliable information, and you know you're within an area that your bank is providing compliancy. The My Milestones will provide you with answers that are relevant and up to scale at all times. So a little bit about why My Milestones is so important. It changes our perception on finances. 50% of Americans are anxious about their personal finances. And then what happens to us when we have a lack in that financial literacy? You definitely see an economic and a public health crisis. And in order to improve that standard of living and that income quality, we need to really recover what we think and how we think about our finances and make sure that we're not burning out. So, did you know that 67% lack knowledge to make sound financial decisions? That resonates very, very well with me. Each of us has a different way that we've learned about things in the past and maybe who taught us about finances, or maybe someone didn't teach us about it at all. They said, here, go out, get a job, but we're not going to tell you about what your paycheck means. So there in lies that 67%. 1 in 3 consumers take hardship loans from their 401k annually. We want to get that to a zero. That is super important. 64% of people live paycheck to paycheck. That is so true. I would estimate that maybe even at this point in our economy to be even higher. So we want to get you the knowledge and we want to get you the tools so we can get you to a better space. So right now is your opportunity. We want to get you signed on so you can follow along today. I'm going to have you favorite information and utilize the My Milestones tool to the best of its ability, make it work for you. So if you aren't already registered, I want to give you a moment now to either scan the QR code if you're on your phones, or you can go and visit the wgu.mymilestones.com. The WGU site is a custom site. So while you're starting to get signed up there and signed on, I want to talk to you a little bit about how amazing that is. Also want to encourage you, if you're on your phones, to bookmark that because that will come in super handy. It gives you a lot of easy access and helps the platform to almost act like an app for you. So we want that to be super easy for you to plug in. So while you're doing that, WGU has done a great job of customizing their site to where once we're on there, you're going to be able to see all of the places you can still get to WGU just by being in the My Milestones. Hong and her team did a tremendous job of making this a place where not only you can get all of your financial information and your education, but you can plug in directly to WGU right from the My Milestones platform. So while you are doing that, I'm going to go ahead and navigate to the live site. This is what your first page will look like. you want to get logged in if you're already registered, and if you're not, you'll want to sign up. I've already created a login, so I'm going to go ahead and log in. As we're moving through this, let's see some thumbs up if you're in, ready to go. If you're having trouble getting in, please put into the chat so Matt can help assist in that. And this is what your main site is going to look like. The first thing I want to draw attention to is this join handshake. There it is right there. You've got your WGU over here, your logo, you know you're in the right place, but then you also have the opportunity to just pop on join handshake from here, which is where one of your sources is, obviously, to get so much information from Hong and team. Then I'm going to scroll down to the bottom. You'll see that you can get in touch with Commerce Bank as well, but you also have your careers at wgu.edu and you have wgu.edu career services. So plugging in here is going to give you access to more of your WGU sites as well. And that is just so wonderful, and it's very unique and special. So I want to make sure you all know how to navigate those portions of the site. Next, we're going to take a look up here at the very top. You'll have this welcome from the university. And once you get in there, it's going to give you just like a quick overview of what's available to you. One of the components of that is going to be taking a financial wellness checkup. It's less than 5 minutes, but it is highly effective. I want you to take time at some point to do that. You can parking lot that for now because it does take the 5 minutes. So once you do that, it's going to unlock this Get Recommendations tab. Those two components together work and they start customizing information for you on your platform, the things that are valuable and most top of mind for you, just based on those few questions that you'll answer. It doesn't dig into deep personal information. It's just very, very overviewed, and it's just giving the opportunity for you to get information specifically on what's concerning you right now. After you do those two things, we really want to recommend, you're going to hear me say this a lot, discover your money personality. My favorite tool, and it's quickly becoming a lot of people's favorite tools we're finding. This is going to give you the background on how you think about money, whether it's a spending or savings or retirement, whatever that looks like. But if you have anyone else in your household that's contributing to your finances, we want to recommend for them to take this as well, because it really does help uncover a lot of information. And then you can start to be accountable and then have good conversations, and it fosters great money-making decision makings going forward. So we want to encourage you to do that. Lastly, this is setting your street goal. This is a great way just to keep yourself accountable on how you're going to engage with the platform. And once I've confirmed I'm going to engage with this weekly, let's go. I'm building some points right here up in the corner, 25 experience points. What that means to y'all, you'll see it up here. We're going to come down here though to sweepstakes, and we're going to click on that. That 25 expert points just gave me one entry that I can put into a sweepstakes pool for $1,000. We do that monthly. So not only does the platform give you the education component, but it almost acts as a gaming engagement where it's saying, here, we're going to reward you for getting on here and learning about things that you already want to learn about. And you can save up your entries. So say you got 50 entry or 900 experience points and you have 50 entries, you can actually save that all up for 1 month if you wanted to, which obviously would increase your odds of winning the $1,000 prize pool. So that's pretty incredible. Now, after we've seen all of that, it kind of gives you like a quick bird's eye view. We're going to go ahead and jump into the actual course itself, which is about getting out of debt today. So pop back to homepage. Here we are. Everybody's on the same space. We're going to come up to topics and we're going to go down to courses. Now, courses is going to give you a very big overview of what we have available. You can kind of glance through here. If y'all are scrolling, give some thumbs up. Smiley faces, anything there to show that you're moving along with us. Here's your getting out of debt. Avoiding it in the future. All right. You see, I've completed it. I'm going to pop on it. So this course is pretty incredible. It's got some depth to it, and because it's 45 minutes long for the overview, I'm going to go ahead and move through it with some components here that's going to help you better understand things. We're going to call on Mike to explain some things, and this will help everybody get a better footing on this topic, but we're also going to look at favoriting some information because I want you to be able to go back and review this later. So you're welcome to follow along here. And we're going to do the first part of this is the lesson 1. We're going to go ahead and do this video on managing debt. So I just need to know, Matt, when I hit this, if you can hear and see okay.
Every day, there are more and more news stories about how student loans and consumer debt can be debilitating to your financial health. In fact, you and your family may have your own stories about borrowing money. The truth is, some debt is normal and even helpful. For instance, it can be hard to get by without borrowing money for big-ticket purchases like a car or a house. So it's not debt that's specifically the problem. It's taking on too much debt without having an actionable plan for how to get out of it. If you practice and master smart borrowing habits, you'll be able to reap the benefits of using and managing borrowed money. When you're a working adult, the hope is that your income is growing at a greater rate than your debt. The amount of debt you carry compared to your income is called your debt-to-income ratio, and it's one key factor creditors look at when deciding whether to extend you a loan. If you owe a lot of money to creditors and don't have a high enough income, it shows you are a riskier candidate for obtaining more borrowed money. Your debt-to-income ratio can also be a useful tool to gauge where your personal finances stand. Reassessing this ratio will surely be needed throughout your lifetime as your income and expenses change, and as you plan for financial goals like retirement. It's important to be aware of the relationship between your income, expenses, debt, and credit, as they all affect each other. In fact, how you manage your debt is one of the main factors that credit bureaus look at when calculating your credit score. If your borrowing habits get out of control, such as by reaching maximum limits on lines of credit, only making the minimum payments, or not making payments on time, then your credit score will be negatively affected. On the other hand, if your debt load is modest and you're managing debt consistently, your credit score will be positively affected. So, is there a solution to staying out of debilitating debt? Well, it really comes down to a few things. These include utilizing budget tools, creating a savings plan, understanding your spending personality, and continuing to assess your financial needs. Doing so will help you be more educated and empowered to maintain a healthy and manageable debt load. However, if you find yourself stuck and unable to take action on your own, then sometimes it can be helpful to seek professional advice. Managing debt can be stressful. Just know this. For most people, borrowing money is a normal part of life. Managing debt just takes a little bit of planning and smart borrowing.
Awesome. So I wanted us to understand, obviously, the beginnings of managing debt before we jumped into anything else. But I do have a couple of things there that I want to touch on right quick, and I'm going to invite Mike into answering some of this part of it as well. The first thing is you'll notice that they did talk about like money behaviors. That is, again, where you come in with your understanding that psychology behind what you're doing. So that money personality is a great one for you to take, and we'll favorite that later. But my second question was, when I'm watching that video, is about the debt to income ratio. Mike, can you talk a little bit about that debt to income ratio and how that should look for us, like percentages, if there's a formula that we should be thinking of that kind of simplifies this for us?
So I can talk all day about all of these things, but I will try to keep it short, and you guys know me very well. So I would say, as it relates to debt to income, one of the things that I and I know the industry kind of focuses on from a number perspective, if you really want to look at a number, is from a credit bureau reporting and scoring standpoint. They use what's called a debt utilization ratio, which is very similar to a debt to income ratio, or somewhat similar. They recommend staying below 30% utilization, meaning your debt versus your outstanding. I guess I'm a little off on this. So debt to income is really going to be more geared toward each individual bank's lending policy. So when we talk about debt to income, and if you're looking for new credit or you're looking for a car loan or something along those lines, your debt to income is really going to be dependent upon that lending institution. Now, the higher your debt to income ratio, the more interest you're going to pay on a loan or on a credit card or something like that. They do special pricing terms based on the debt to income. They also take into consideration that debt to income and how it impacts your score at the end of the day. Now, I'm going to back up. I was talking a little bit about utilization ratio, which is different than your debt to income ratio. But from a utilization ratio percentage as it relates to your credit score, a number, if you're looking for a specific number from a credit scoring perspective, that number is 30%. As it relates to debt to income, every banking institution has different debt to income ratios that they utilize during the application process when you're looking for a loan or a credit card. So,
Okay,
does that
great.
help? I know I kind of went off the rails a little bit at the beginning, but I think I had two terms interchanged there.
That's excellent. That's what we want. We want to get those answers to like what we should be looking at. That 30% mindset, I think, helps everybody just to understand, okay, this is where I need to stay. There's a window here that I need to be looking for. And then we'll talk about the how do we get there if we're already beyond that place. So we're going to go ahead and jump to the next part of this. And it talks a little bit about, obviously, debt is a tightrope walk. There's a very fine balance of good debt and bad debt. So it's all about you managing it properly, creating those good habits, and knowing what you need to do to make that actionable. So we're going to go ahead and take a look at some of this stuff here. And these causes of unmanageable debt, some of it's going to be like, oh, that's probably common sense. We know that we shouldn't be out just, spending. But what we want to know is a little bit more of like, why does this happen? Sometimes we're like, I'm a good person. Why is this, situation happening to me? I feel like I do the right things. Well, there's some things that maybe we don't realize that are happening and get us into trouble in the first place. Some of this stuff is obviously going to be planned or practical debt. Those are things that we know we're going to be doing. We know that they're coming later on in life or in the now. So we try to plan for that as best we can. With this audience, student loans obviously is going to be probably top of mind. And knowing what you can afford within working and going to school, you all probably think of those things, and that's something that you really consider when you're going into maybe go apply for a loan. Some of the other things, though, that maybe we don't think about is the misuse of credit cards. Shopping sprees. If something is on sale, is it really, just because it's on sale, does that mean that we need it? Just creating that kind of mindset. Purchasing a vehicle or house, oftentimes we find that, yes, our income is showing that we have that available, but are we really taking into consideration for the what's coming? Like, do we have some other things on the back burner that we're not putting forth and putting as a priority? Tax debt is one of those things. If you know your taxes are coming and you're not sure where you stand with those, don't be going out and buying anything, new. Because you just got a raise doesn't mean you should go and live into that zone of earning that money. So there's a lot of things that can cause that debt. And I think, like we, as mentioned, it can be common sense, but a lot of it is also just stemming from this financial illiteracy. Sometimes we just don't know. We don't have the tools. No one's talked to us. No one's taught us. My Milestones is here to do all of those things. It's going to help you plan. It's going to give you more information for knowledge. It's going to help you action these things, and little by little, let's go there again, little by little, you will see improvements. And I think again, as we move forward in this, I'm going to have Mike talk about a couple of different ways that debt can be paid off and understanding the definitions of that. So the last part of this is emergency and financial catastrophe. One of the things I want to talk about right here and touch on is the medical debt. Oftentimes you are able to go in and, I guess, for lack of a better term, negotiate with your hospitals or your medical places. And if you don't know that you can ask this question, then you don't know. I didn't learn this till way later on in life. So let's say you have a medical debt to a hospital and it's overwhelming. The first thing you can do is you can set that on a payment plan. They're not going to charge you any interest. So that does not have to be at the top. You don't have to put it on a credit card where you're, paying interest. You can say, I need to put that on a payment plan. Perfect. The second great part of this is if you can pay a portion of it in full, you can ask them if there's any way that there's a discount available. You can say, I can pay this amount in full. Is there any way that this can be the final amount? So if you don't know that, then you're already like behind the ball there going, okay, well, now I've got to build all of this money into this medical bill and I can't get ahead of it. So knowing those kinds of things are really, really helpful. Obviously, if you have a job loss, that's a tough situation to be in, and that's why having a emergency savings is important. Lawsuits, there's some things there depending on what kind of job you have with, we call it umbrella insurance. And then just the lack of insurance in the face of an unexpected event. All a lot of tough things that can cause some debt, but there are other things that we can do to help control that. So we're going to pop to the next portion of this. And the poll that I took earlier today, if you had to estimate how much debt you have today, so would you even know? Have you sat down and looked at it and put real numbers to it? 26% of people said between 10 and 50,000. 44% said less than 10,000. What do you think about that number, Mike? Just curious. 44% less than 10,000, pretty accurate. 9% said less or more than 200,000 because that's taking into account a house probably. 5% between 150 and 200,000, house purchasing as well. 6% between 100 and 150,000, and 10% between 50 and 100,000. Okay, so that is according to the Experian median household debt in America in 2023, and that was showing that 215,000 up significantly as compared to 92,727 in 2020. So it jumped in numbers there. That debt, that's showing that we're climbing in the debt part of things. So we need to reverse that. So let's talk a little bit about diagnosing this and what debt differences look like. There are different types of debt, and we're going to weigh that out next after the video.
Did you know that some debt can actually be considered good? There are many different kinds of debt, and depending on what you use your debt to pay for and how well it's managed, your debt can actually be a positive part of your financial picture. Generally, debt can be considered good if it's for an investment that will grow in value over time or help make you more money. Taking out a loan to fund your education is a great example of what some financial experts may refer to as good debt. Bad debt, on the other hand, is debt that costs you more than it's worth in the long run, like a $100 pair of shoes that you charge on your credit card and end up paying $200 for once you've paid the interest charges. However, if you aren't timely with your payments, even good debt can turn bad. For example, mortgages, student loans, and other loans like business and personal loans can all be great investments. Yet, Defaulting on a mortgage could lead to your home going into foreclosure. Student loans left in default can go into collections, and your wages can even be garnished to pay off this debt. And if you fail to make payments on business loans, the lender may seize your business assets or even your personal assets, depending on how the loan was guaranteed. And finally, defaulting on any of these loans can lead to a major decrease in your credit score. Credit cards and consumer debt, like consumer finance offers and layaways, are other common types of debt you might encounter. While it's actually good for your credit score to use credit cards and consumer debt wisely, letting this type of debt get out of control can be hazardous to your financial health. Credit card debt can be especially dangerous, as interest charges will cause your unpaid balance to continue to grow. Unpaid credit card debt can also go into collections and damage your credit score. Although taking on debt can pose dangers to your financial future, don't let that scare you off from applying for a loan or credit that you need. Just make sure you aren't borrowing more than you can pay back and that you make your payments regularly and on time. Managing your debt responsibly is actually a great way to increase your credit score, opening up more opportunities for a great financial future.
So true, so true. All of that is great information. So talking about how not debt, all debt is created equal, going with the good versus the bad here. This is great infographic that's within your course. So every time you click on one of these components here, it's going to show you your debt risk level, and then it's going to give you pros and cons to everything about it. So as a student loan, it's showing you obviously this is in the green. We're good here. Here's your pros. Here's your cons. We won't go through all of this, but I want y'all to take time to take this course later, and you'll see you can get a little bit more in depth about this. Mike, what do you think out of all of these components here, though? What is the biggest trap for people getting into bad debt situations?
So I think this infographic really sums it up, and I would really invite people to definitely check this out. The way the bureaus view debt, to be honest with you, is kind of a simple term. It's they look at what we call revolving debt and what we call installment debt. So when you think of revolving debt, we think of credit cards, we think of debt that varies from month to month, right? So revolving debt, the bureaus will look at that as a much more risky type of debt. So they will weigh that negatively a lot heavier than they will something like an auto loan. And I always tell people the way to look at this is when you look at revolving debt, you're looking at it from a credit card perspective, meaning I've used my credit card to go out and buy a pair of shoes, or I've bought a cup of coffee or things like that, that are what I tell my kids wants versus needs, right? And when the bureaus look at that revolving debt, they look at that debt the same way maybe a banking institution would. If you default on your credit card or you have a late payment on your credit card, the lending institution really can't go get that cup of coffee you drank a couple of weeks ago, nor can they go take your shoes or things like that. So that becomes a much more risky transaction from both a credit bureau perspective and a banking lending perspective. Whereas with an automobile loan or a home loan, that are usually and typically in the form of what we call an installment loan, meaning you borrowed a set amount, your interest rate is fixed usually, and your monthly payment is fixed as well. If you would happen to default on those things, that default ultimately could lead to foreclosure on your home or repossession of a vehicle. Therefore, at least the lending institution has the ability to get some of that debt back, right? So both the lender and ultimately the credit reporting agencies look at that debt as a little less risky, right? They also look at it as, hey, these are things that the individual, they need a home to live in. They need a comfortable place to be, to do all the things like have a job. They need a car to get to and from work and things like that. So from that perspective, as you go through this, think about those things like payday loans and credit cards and stuff like that, because honestly, when the credit reporting agencies see that you are going out getting a payday loan, they're ultimately going to think, wow, there's an emergency going on here, right? It might be a short-term emergency, it might be a long-term emergency, but it's an instance where the individual consumer is really searching for cash quick, meaning they need that money to cover any sort of debt that they might have. So I hope that summarizes it up. But as we get to this, you guys really think about revolving debt being a little more risky than installment debt. So when you're reviewing your debt in your credit report, think about where those two kind of hinge and kind of which one's higher than the other.
Thanks, Mike. And Stacy, before you get started, I had to mute you because we had some feedback. So you'll want to unmute yourself before you pick back up. But Mike, I'll give you another example of how I saw the car debt and how I early on in my days attempted to tackle that through the use of a credit card. And so, car expenses are sometimes unexpected, and repairs have to happen immediately. And maybe you don't have whatever the cost of that repair is readily available in a checking or a savings account. And so what I did when I first started out is I got a credit card with one of the repair shops that I was taking my vehicle to, because I wanted more peace of mind that if something, a large dollar item repair came up, what I would do is I would then use the credit card that I had through association with the repair shop, and that would allow me to at least pay back the amount over the course of 6 months without incurring additional interest on those payments. And so that was, as an early starting to get my feet wet with credit, but also starting to get my feet wet with building an emergency savings so that I didn't have to rely on a credit card when things like that happened. But that was one little tip or trick that had helped me save interest on large purchases like the repair of a vehicle that has to happen and typically has to happen right away. I used that credit card with that one institution as a way to stretch the total payback and not have to incur interest month to month. So think about the cards that you have, and are they intentional, and are you using them to maximize not paying interest and to save yourself money in the long road? Because I think when you look at your portfolio of the credit that you use, you want to make sure that you're putting your money to use the best way that you can. And that at the time was a way for me to avoid paying interest on those unexpected large purchases that pop up in all of our lives. So Stacy, I'm going to mute myself and I'll throw it back to you.
Love that. Thank you for sharing, Matt. That's outstanding. And I appreciate you muting me with the feedback there. That's always good. So now that we've talked a little bit about, what debt is, good versus bad, some of the things that we really need to be thinking about, let's go ahead and dive into how we get out of debt. How do we start working through that process? Because if we're already there, what are our next steps, right? We've got the knowledge, we know what these things are. Now, how do we attack it? And this is another part where I'm going to turn it over to Mike, because there are some strategies here and there's some information here. And I think that Mike's, with his deep well of information, he can kind of wrap this up a little bit more neat and tight. But again, I want to encourage you to get back on here, especially if you are a person that needs to physically read something. This talks about all the different ways. I'm just going to kind of cruise through there. So again, we've got snowball, avalanche. Isn't that funny that we're talking about snow? Consolidation, transfer, balance transfer, debt settlement and negotiation, and bankruptcy. So Mike, if I can turn this over to you and you can kind of drill down some of the components to all of these, just because I know that everyone needs to know, like, how do I get started? And not only that, we're going to reference that money personality again, understanding the psychology behind your spending habits, because once you get a handle on that, and Mike's talking about these components, those things are going to come together really nice and neatly, and that you will be able to action and start making some differences. So I'll turn it over to you, Mike.
Well, mute. All right, there we go. Okay, so honestly, the best thing that I can tell you all to do right now is to get a better understanding and insight into kind of what that debt looks like, right? So if you're an individual that you know you're sitting on some debt, you really need to understand what that debt is. So my starting point, and I'm going to use my parents, retired, both good retirement incomes, both excellent credit scores. But what I found about 4 years ago is they were trying to work their way out of credit card debt and medical payments. So the first thing that I did with them is we sat down and we pulled their credit report. And when I say credit report, I'm not just looking at the score, right? I'm looking at the report. I want to know where the debt is, where it's coming from, what those interest rates are. And then that way I can kind of bundle all of that together and say, okay, as it relates to my installment debt, you have one car loan. Okay. So that one car loan is a small portion of my revolving debt, which is made up of $35,000. Okay. That revolving debt is ultimately the harshest thing that you have going on from a budget perspective, because while you're making your minimum monthly payments and never going into debt or collections, and ultimately never having a negative impact on your credit score from a payment history perspective, you're still not able to get yourself out of debt because that credit card interest is eating you up. So what I found with my parents is they had great credit scores, but what they didn't have is they didn't have the ability from an income perspective to pay their way out of that debt because that revolving interest was kind of eating them up. So where we started is identify what those credit cards are, which one has the highest interest rate that you're paying interest on, which one has the lowest interest rate, what are the balances on those credit cards, which balances can you knock out first. Like if I have some extra money at the beginning or at the end of every month, I want to knock out that one with the lowest balance, right? Because from a psychological perspective, if I get to the end of month 4 and I've gone from four credit cards with debt to 3, you got to pat yourself on the back every once in a while, right? Because as we know, we're all dealing with this, or we'll all deal with it at some point, but you got to celebrate the good things. So we started there. We paid down some that we were able to, but then we also got to a point where some of the balances were so large and the interest was eating us up so bad, we had to really look at doing balance transfers, right? So when I talk about balance transfers, because my parents had great credit scores, we were able to take some of those balances, apply for a new credit card. And typically what I want is a credit card that offers a 0% terms for a long period of time. So I'm actually helping my aunt and uncle right now with this right now. And I'm going to, there's a lot of websites out there, but the website I typically use is mint.com. And they will compare this. They compare a number of different credit cards and all of the benefits of each one versus the other ones. Or nerdwallet.com. I'm sorry, nerdwallet.com. They compare all the different credit cards. And then what I'm able to do is say, okay, we need to open this particular credit card. It has a great balance transfer rate, because if I want to transfer $10,000 off of a credit card that's charging me 24% interest, and I want to transfer it to a credit card that will offer me 0% interest for 18 months, I can tell right then and there that I'm probably going to save about $150 in interest fees every month, right? So that's going to go directly back into my pocket. Now, what you will find is that in today's higher interest rate market, that balance transfer fee that you're going to pay to move it from bank 1 to bank 2 is going to be anywhere from 3 to 5%. That's the upfront cost of moving that debt from the 24% interest rate to the 0% interest rate. Okay. So we moved that money over to the 18-month credit card. And if you can all imagine, the first thing we did after we got it moved over is we took the scissors to the old credit card, because we no longer want to play around with that debt or that interest rate. So we got it moved over. We have now set up a 0% for 18 months. and we don't use that card for new purchases. This basically becomes a place where we park that $10,000 and we set it up to make what we're going to call installment payments on a revolving credit card. So if you take the 10,000 divided by 18 months, that's $1,800 a month. That's a pretty big number. But what we're trying to do is we're really trying to whittle down as much of that credit card debt as we can without paying the interest. Okay. So that is what I would say. If you have good credit and if you can manage it in a way where you don't use those old credit cards to make new purchases, that's a great way to use the balance transfer in your favor. But from a starting perspective, look at those credit reports, understand what your debt is, and then try to Stacy's point, smallest balance equals the snowball debt reduction. Then you can start working on those smaller balances. But try to utilize the balance transfers and things like that to get you started and really start going down that road. Debt settlement and negotiation, it's definitely worth calling and having those discussions with those credit card companies to see what they can do to help out. There are different types of payment plans that they can put you on. There's consumer credit counseling programs. There's payment assistance programs. Every lending institution has a different type of program. In some of those programs, they might put you on a reduced interest rate. That reduced interest rate might come with a cost, meaning you might not be able to use that card for purchases anymore, right? You're basically saying, hey, I want to go on a program. I'm having a hard time making these payments at the current interest rate. You will then have to qualify for that, and then you'll have to meet certain qualifications every year to stay within that program, but it will help you reduce that debt and reduce that burden of that interest rate. And like I said, every institution has different ones, so it's worth calling. But there's some pros and cons with that. So that's a great one to use as well. So does that kind of sum things up a little bit, Stacy? Okay, all right, because I could keep going on and on and on.
I love that about you, Mike. We're both very passionate about teaching everyone. So that does give, I think, a broader perspective of what that can look like for all of us. One of the areas, obviously, we all want to try to avoid is bankruptcy. And we want to make sure that you have all these other tools prior to getting to this space and this place. One of the things that Mike was talking about was the counseling and people, helping get you maybe a little bit more on track with doing some debt consolidations or just negotiating things. One of the things you want to keep in mind is that you want to avoid debt relief scams. We learned this just in learning how to avoid phishing emails. Anytime they're creating urgency or they're telling that you can do it for absolutely free or pennies on the dollar, they're going to target people that are maybe higher in their debt level because you already are feeling that stress, and they're gonna play to that. So I'm gonna run this quick video, and then we're gonna move to favoriting some things because I want you to be able to go back in and take a look at more information on this topic because it's quite broad.
Many people find themselves desperate to get out of debt, and unfortunately, scammers love to prey on vulnerabilities such as these. Debt relief scams often offer outcomes that seem too good to be true and can leave you worse off than you started if you fall victim to them. So be on the lookout for these signs of debt relief scams. Debt relief scams may come disguised as legitimate services like loan consolidation, credit card balance transfers, or credit counseling. However, anything that offers you a quick fix to all your debt troubles should raise a red flag. One big sign of a debt relief scam is if the organization contacts you first to offer help. While scammers will always make the first move, legitimate organizations usually don't contact consumers with these types of unsolicited offers. Additionally, if the organization is pushy or aggressive and pressures you to take their offer, that's another sign that they are trying to scam you. Your financial future is at hand, and a legitimate organization will not rush you to make a decision. Scammers also tend to make big claims, like promising to eliminate your debt for pennies on the dollar. Or they may recommend drastic or extreme actions, such as advising you to stop making payments to your creditors or to cut off contact with them altogether. You might also run into scammers who use government symbols or language in order to seem legitimate. If they claim to be associated with a government agency, look up the official contact information and contact them directly. They should be able to confirm whether the communication was legitimate or a scam. Finally, if an organization won't give you information about how they plan to lower your debt or pressure you to pay them before you've seen anything in writing, that's another sign that they are not legitimate. If you think you've been contacted by a scammer, don't give them any personal information. It's better to be safe than sorry, so be sure to always do your research. And only deal with debt relief organizations that you know are legitimate. Strong customer reviews, a positive rating with the Better Business Bureau, and proper accreditation are good clues that you're with a safe organization. You can also protect yourself by asking a few smart questions. No matter the program, ask if they're licensed to do business in your state. Although not all states require licensing for all programs, most do. If you are working with an attorney, check if they are in good standing with your state's bar association. Remember, it takes time to pay off debt the right way. Scams may offer quick fixes, but they will only prevent you from achieving your financial goals if you fall for their trap. Look out for these signs of debt relief scams, and you'll be able to protect yourself while paying off your debt the smart way.
Gosh, this is such a big topic. I feel like we need like part 1 and part 2 of it. Right now, we're going to go ahead and go back to the main dashboard because I want y'all to take this course on your own. And that way, then you can have other people in your family take it as well. But I want you to be able to favorite some information so that once you get back into your My Milestone site, you are able to get a few more pieces of this information today, since we're not going to have time to cover all of it because it is such a vast topic. So I'm going to have us go ahead and go to the icon search, and you can type in debt because that's going to get you where you will see all of my favorites. And I want you to go ahead and just follow along and favorite anything that you feel is going to be useful for you as well. So it immediately populates the course that we're doing today, getting out of debt and avoiding it in the future. The other one that I felt like was really important was the staying on track with student loans while in school, because obviously y'all are students. And the next portion I want you to favorite is your tools, your debt to income ratio. I think Matt dropped that in the chat as well. And then the student affordability. So you'll see that I'm just clicking on here and it's going to hold this information for me. On the getting out of debt, you'll have to click on it to get to the heart, and then you can go back and click on this and get to your heart, and then you can go back. So once you have those hearted, we're going to continue to move down here. Content, managing debt. This is a quick 3-minute video. I find a lot of value in this video, and I love that My Milestone shows you the amount of time that you're going to be investing in each item so you know how to plan yourself correctly. There's a lot of content here, so anything that you see, heart, that you want to take a look at, pay down debt or invest calculator, that would be a great one as well. Types of debt, we covered that in the course, but if you wanted to just view that quickly, that would be a great place for you to heart that information. All right, you can see that there's a lot here. We just talked about the causes of unmanageable debt. That was covered in the course as well. And when you scroll down to the bottom, you're going to see that once we've typed in debt, the platform automatically hits on all of these topics that could be debt related: medical debt, financial stress, consumer loans, loan consolidation, and loan forgiveness. So if any of those areas are points of really high stress, we want you to click on those areas, and it's going to generate a whole nother level for you to go in and start clicking and hearting content, saving it. So now I'm going to show you where your favorites live. They're going to be in your dashboard. If you pop down here on this favorites tab, it's going to generate everything that you just hearted. So you can see that mine's pretty thick and deep. And this is just such a great way for you to go back and take a look at information instead of scrolling on your phone for 10 minutes at night on whatever you're doing. Pop onto your My Milestones, cover a couple of these videos, infographics, tools. We want you to really equip yourself to getting to a better place. The things that we talked about today, the debt to income ratio, this is a tool that's interactive. It's going to ask you a few questions. You can plug numbers here, and it will literally start generating everything for you. Do you want to include him? No, we're going to skip it for now because I just want you to see what we've got here. I've already answered some of these. I wanted you to see the interactive tool. There you go. Please estimate monthly payment you will make toward each of your liabilities. So it begins by asking you some very valuable questions. It's going to help you know what your actual debt is, and you're going to get real. It's going to give you the moment to get real so you can start making a plan to get out of it. We have really run up against time here today. I've only got, it looks like 1 more minute in the session. Did we get questions answered? Do we have additional questions that need to be addressed that we could take one off and address later on? Anyone in the chat? Otherwise, I'm going to turn it over back to Wen or Hong, and we can go from there.
Yes, thank you, Stacey. If you do have a question and you think of it later on, you can always email us or contact our friends here at Commerce Bank, and they'll be happy to get you an answer as well. But we can go ahead and conclude today's session. Thank you all for joining and for the great engagement. We always love seeing that in the chat. You'll receive that recording of today's session soon, along with a brief survey, and your feedback helps us to continue to bring great sessions like these to the WGU community. And of course, we'd like to extend a big WGU thank you to our Commerce Bank friends. Stacey, thank you so much for leading such an insightful discussion, and to our special guest, Mike, for sharing such immense insight and real world perspective on managing and overcoming debt. Special shout out, of course, to Matt here for always keeping us active and answering questions in the chat, and Ashley for jumping on as well. Other than that, we hope you have a great rest of your day, and we hope to see you at another session soon. Take care.